talking about algorithms in the market. I mean, like, do you believe the market is run on an algorithm?
On a big algorithm, no. I mean, there is somebody out there who has 3 letters in his name who says that the whole market is run by one big giant algorithm. Rubbish. Absolute rubbish. There are algorithms at investment banks and institutional brokers. Yes, they are, but they are only execution. They don't think for themselves. They're only there to basically trade for the bank so that the trader doesn't have to sit there and click the buttons. That's all it's there for. And they get turned off. So they're not this almighty thing. They get turned off. Perception of value can change. But an algorithm can't do that. It's impossible. And who would control this giant algorithm? It's not like a James Bond villain sitting there with a button.
All right, folks, here we are on Trading Up. We've got Paul Scott back on the show. It's been a few years. Welcome back, Paul. How are things?
Good, mate. Good. Yes, it has been a while. We were in the midst of COVID last time that we spoke.
Damn. And that, I mean, like, at the time it felt like that was just the other day, but now it is definitely a distant memory, thankfully. Hey, look, this, if you don't know Paul has had the pleasure of working on a trading floor. His old man did it, and he's got a completely unique way of seeing the market. So we're going to dive into that and talk about all things trading in today's show. So to start off, Paul, with, I mean, what's been going on with you over the past 5 years? It's been, I can't believe it's been that long.
The past 5 years. Became a dad again, and a granddad within a year, which is a strange one. But now we have 3 girls and a boy. So he has been an absolute godsend. He's a little superstar. Hopefully train him up one of these days, when he gets a bit older, if I'm still around. It's been nice. It's been basically took probably about the last year off, really, sort of have the first year with the baby. So I'm sort of back in the saddle these days, but I mean, nothing's changed. Still teaching the same principle, that it's not about what you see on the internet, what you read. It's not about, one big giant algorithm controlling the whole market. It's not about AI. It doesn't come down to anything like that. That picture there in the background, that is my dad. That is him sitting in the ring in the 1980s at a company called Henry Bath. That was part of an advert that they used to do back in the day. Nothing's changed since his day, and nothing's changed since people trained him. It's keeping it simple, keeping it really, really simple.
One thing I was going to ask you, and you've sort of reminded me about it at when we chatted before, the trading floors, right? So you see on the New York Stock Exchange or whatever it is, I assume it's there. The start of the day, it's always on the news. Everyone's there going, yeah, bang, dinging the bell and stuff. Is there anyone actually on the trading floor these days?
Well, in Europe, the only open outcry market left is actually the London Metal Exchange. So that's where, born and bred there. It doesn't do as much business these days. It's only really there now to set the official prices for the day. The rest of it's kind of gone over to screens like virtually every other trading floor around the planet. But it was an art form. So you can read on a digital chart the intentions of people on a trading floor, like it used to be done back in the day. Now, these days, look, you shout and scream at each other through a screen. But essentially, again, that is still the same concept. And, not quite sure what's going on with the New York Stock Exchange these days, because most of the time it's just TV studios.
Yeah, well, exactly. That's what I was thinking. I mean, since we have chatted, I mean, a lot has gone on. So we've had some turbulent times with the markets, with wars going on and crises, etc. Obviously, COVID was coming to an end at the time, and we've had things like the advent of AI, right? So, I mean, how do you see this factoring into what the average retail trader out there is trying to do, and is there anything they could do differently?
Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. That's right, get either the Essential, Plus or Premium plans absolutely free, and all you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below.
I'll answer the last one first. Pass. In terms of programming things and stuff like that, I have no way I'm an expert in things like that. But for me, I had a great conversation with somebody that's sort of heavily involved in AI. And he basically broke it down and he said, look, it's just like a super, super fast way of searching the internet because it does it for you. You don't have to, you can type things into Google and you're not necessarily going to get the right answer. So he said it's a super way of, condensing information very, very quickly. Problem with trading is if it's reading what's on the internet, it's never going to get the real deal, because nobody talks about what it's like to really work on a trading floor. Nobody says how trading is conducted on a trading floor. Nobody understands the trading floor philosophy. Because it's not on the internet, it can't compare it to anything. So all it's going to basically be doing is just going back and just rehashing all of the rubbish that's out there, but then putting it in AI speak. So if it's being fed the wrong information, so therefore it's going to give you the wrong answer.
Yeah, I watched a video on that recently where it wasn't necessarily about trading, but it was about something else, and the fact that AI was hallucinating and giving somebody an answer. They're creating content on it, pushing it out there. Other AIs are picking it up and essentially rewriting the rules of history and the rules that we have established, and people are coming away with the wrong facts. So this could be also happening in the trading space, and I can completely see that.
I would say 100%. I would say 100%. I mean, let me give you a real sort of stupid analogy, right? You're going for a walk through the desert. You come out, you're gasping for a drink, and there's a guy standing there, right, with bottles of water for sale. And you say to him, so how much is that water? It's $20. Well, I'll give you 10. Well, there's a market. It's 10, 20. 10 bid, 20 offered. Guy says, you can have it for 18. I'll give you 12. Have it for 16. Give you 14. All right, we shake hands in the middle at 15. How long has that concept been around? Forever. Because it's human nature. It's how we do things, right? So we derive value from things. Now, it could be that you go and do the same walk again and you do it the week after, but you come out now, and instead of the guy having lots of bottles of water, maybe he's only got a few left. And you go, there you go, I'll give you $15 for your water. He says, no. No. Now it's $25. And you say, but it's the same bottle of water. And you go, yeah, same thing, different value. So prices, markets, ranges will have different values over time. Depends on what's going on. It doesn't really matter what's going on, but something will lead up to it and change it. How can you program an AI to think like that? How can you program an AI to think like a human being? It can't. It's impossible because it's not sentient. So it's impossible.
Yeah, not yet.
Not yet.
Well, it may get there. Yet. It may get there.
Well, let's not wait another 5 years to do another interview, but we'll do one again in the future and see how far they come with it.
So, I mean, talking about algorithms in the market, I mean, do you believe the market is run on an algorithm?
On a big algorithm? No. I mean, there is somebody out there who has 3 letters in his name. I won't say the 3 letters I won't say the 3 words that I'm thinking of with this certain person, because we'd have to bleep them all out. But there is somebody out there called ICT who says that the whole market is run by one big giant algorithm. Rubbish. Absolute rubbish. There are algorithms at investment banks and institutional brokers. Yes, they are, but they are only execution. They don't think for themselves. They're only there to basically trade for the bank so that the trader doesn't have to sit there and click the buttons. That's all it's there for. And they get turned off. So they're not this almighty thing. They get turned off. I'll give you an example. July 2025, Trump announces that they're going to slap some tariffs on copper coming into America. So the price of copper drops like a stone very, very quickly. Then turns out that it wasn't actually going to be like LME grade copper. It was actually going to be the concentrates and stuff like that. So the price rebounded. However, brother-in-law works at JPMorgan. First thing that they were told on that particular morning after the announcement had been made was turn those algos off, because they could just create utter carnage in the market. So that's why people are still sitting there at a desk. That's why they still employ traders, because traders have what? A brain, and you can change your mind. And your perception of value can change. But an algorithm can't do that. It's impossible. And who would control such as this giant algorithm? It's not like a James Bond villain sitting there with a button. It's a ridiculous concept.
It's interesting because, basically an algorithm, let's call it a strategy, right? So you're kind of talking about a strategy. So the strategy is get in when this happens or get out when this happens, or whatever it is. Now, the thing that an algorithm doesn't have is the emotional connection to the market or emotion in any sense of form, right? So if the money's going down, they don't really care. If it's going up, they don't really care. If they're winning or losing, they've got no care in the world. Humans obviously have some emotional impact. Can you explain to us how that sort of emotion came across in a real life trading floor, and anything you sort of saw there, any stories or anything?
Well, you've got to think that all markets are driven by human intent. All right, so human intent is, if I think something's overvalued, I want to sell it because I deem it to be expensive. Or if I think something's undervalued, I think it's cheap, I'm going to buy it. If enough people think the same way as you, well, then there's no point in selling when everybody's shouting buy, and there's no point in buying when everybody's shouting sell. So the human brain can make that determination, whereas an algorithm would never make that determination. It would just keep buying. So if I was to give you an example, you could program an algorithm to say, right, every time the market goes bid at 95, I want you to sell X amount. That's it. That's all, that's all it can do. Or it goes 97 offered, I want you to buy it, but only when it goes offered on the screen. So again, that can't happen. But you would see at certain places, certain prices, I should say, certain prices. So certain key decision-making prices are where? At the top of a range and at the bottom of a range. Now, everything else in between the top and the bottom, this is where I'm executing orders for clients. I'm not interested in taking a position there. I'm just this is just orders. When I get here to the bottom or when I get here to the top, that is when I will then step up with the account that I've been given by the company and put that money on the line and take a trade. So seeing somebody lose a lot of money by human emotion, by trying to be very smart and very clever, and got his ass handed to him on a plate. He lost $1 million in 6 or 7 seconds. Yeah, 6 or 7 seconds trying to get the closing price in the copper ring, in the second copper ring of the day, which basically is the benchmark price for the rest of the world. And I remember it like it was yesterday. He'd come back off of holiday. He had a beautiful tan. And by the time he'd got out of the ring and the bell had gone, he was as white as a sheet. Because he yesed Bugsy from Barclays for 1,000 lots of copper, which is not a small amount, for 1,000 lots of copper. And Bugsy said, yeah. And then just kept selling. And bell goes ding, 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 ding. He had to get out of that ring, jump straight on the phone to Jim Boland and go, Jim, I've just lost $1 million in about 6 or 7 seconds. What do I do? Go to the pub, have a couple of stiff ones, then you've got to come back to the office and you've got to explain what on earth you were doing. And the thing is, next day, what did he have to do? He had to get back in that saddle. He had to get back in that ring. Everybody knew what had happened and start trading again. So emotions do come into it. Yeah, the human brain is not an algorithm, and how he must have felt then, and how he must have felt the next day. Horrific.
I mean, there's a lot of. The big issue with retail trading and people trying to become a retail trader, or even just stepping the foot in the ring and having a go at it, is that they don't understand the emotion that can appear or rear its head that they've probably never experienced before, because it's just a completely unique thing. Yeah. How did that working on the floor help you sort of overcome any of those emotional hurdles that, like, standard retail trader who's just joining and deciding, okay, I'm going to become a trader, or at least have a crack at it, faces on a almost daily basis?
On a daily basis.
Now, we talk a lot about strategy and mindset here on the Trading Nut podcast, but that doesn't really matter unless you've got the right environment to trade in. So if you're struggling with a prop firm, then I recommend checking out our partner, propfirmmatch.com. These folks have got a massive database of prop firms, got them all verified there with customer reviews. It's completely impartial and transparent. It's worthwhile checking them out. There's a coupon code and link in the description that's going to help you save some money at checkout too.
Well, we would face it on a daily basis as well. But I mean, I suppose we had the camaraderie. You had other people around you that had been through similar experiences, so you could all discuss it amongst yourself, and yes, that would involve quite a few beers, but you could fall back on the older guys. So like my dad, he is very well remembered by people that are around my age and a bit older, that he would always take them under their wing and say, right, this is what's expected of you. This is what you're going to go through. You're going to have, horrible times when sometimes you might lose a fortune. You might make it back the next week, so everything's okay. But how do you feel in those times? How do you bounce back? And it's all about having people around you that have experience of it, which in the retail world, you just don't have that. You don't have that. It's sort of something that I've noticed again since we last spoke, and it's got even worse now with the advent of AI, like you said. It's just
look, the internet as a whole. I mean, people are sitting there on the computers and isolated, and they don't really have anyone to go and talk to. I mean, maybe, like, their partner probably doesn't want to talk about their latest trade or what happened. Very interested if you lost a lot of money. Yeah, they probably don't want to tell them, right? They don't even want to say to them, like, I've just lost $5,000 of our savings. So it becomes an isolating kind of experience for people. I mean, if you were taking a new student on board and saying, right, look, I'm going to try and get you up to speed, and you notice straight away that they've got some emotional hurdles they've got to overcome, how would you get them past those hurdles?
Well, one of the ways in which I do it is I say to people, right, you need to take yourself out of the equation. And what I mean by taking yourself out of the equation is everybody is trying to predict where the market is going to go. Now I say, look, I don't care where it goes. It doesn't matter if it goes up or down. It doesn't make any difference. So what you want to do is you want to be able to identify where these particular levels are. Right, and how you identify them is a major factor. But once you've identified them, then you go, right, well, what can I do ahead of the time? Well, I can know where I want to trade from. I can know where I want to trade to. It's a target. We don't always hit targets, but that's the target. So if I can do that, then I say to myself, right, let's not come out with the old adage of, I think the market's going to do this. The minute you say, I think, you have screwed yourself, right? Because you are playing a game which you have no control over. I've been saying I've been banging on about this for the last 10 years with people, right? You have no control over it. You don't set the current value. So play it from both sides. So if you played it from both sides and you said to yourself, right, well, there's a price. I know that there's a key decision that's going to have to be made from here. Why don't I let the market show me its hand? Yeah, why don't necessarily immediately take the trade. Let it show its hand. So if it gets like a certain percentage past or into the range or down into the range, depending on where the current value is, And then I took a trade, because then I can see that the market has made its mind up about what the decision is about the current value. And so therefore it should continue on in the same vein, because as institutional traders, you're hunting for liquidity. So if a particular price has changed value, so last time it was expensive, we got there this time, something fundamentally has made it cheap, so now we want to buy. Now I want to go and find, where's the next place that everybody wants to sell? So if I go and, so when we push the market up and it goes up to there and we go, right, well, there's no point in now continuing to keep buying, square ourselves up, go short. So again, it's a totally different concept. But
the main thing that's coming out from me is that the fact that you've said that, like, if you said, I think, right, I think is the key word there, right? So the key word is I. Yeah. I does not exist. And if you think in I, you're going to be absolutely screwed. So you thinking, 100%. And I completely agree with you, right? I completely agree. Yeah. And the way I do it, and is kind of similar, is always talking they. So what are they doing? What's everyone else doing? What's everyone else trying to do? And if you can see that, going from your level down here to the level up here, if they're trying to do that, then okay, great. I think I know what they are going to do. Yeah. So I think I know what they are going to do. So that if you add that in, that's the sentence you want to be doing. If you just think, oh, I think they're going to do this. No, that's completely, you're going to get screwed up. You're going to get absolutely screwed over.
Well, because essentially what you're doing, you're trading with your ego.
Yeah, exactly.
And if you trade with your ego and you think that, oh, I'm better than the market because I've got the latest computer and I've got the latest news feed and I've got the best, best account, best spreads, best this, but that's not going to make any bloody difference whatsoever. You have to sit there and say the market will do what it wants to do regardless of whatever the hell I do.
And what about confidence? Like, in terms of, okay, so what's given you confidence that these levels that you use are going to hold and going to give you that reaction that you're after to go from A to B and get you in and out of a trade?
Because again, being able to read the tape. Now, reading the tape is a dying art. There ain't many of us left that can do it. But it is that reading the tape is essentially getting in a time machine, coming back down to a trading floor when it's all open outcry, and witnessing what goes on. Witnessing the emotion, the sound, the volume, the amount being traded at particular prices. So key decision-making prices. So if we said to ourselves, right, all these markets are all split up into their own individual ranges, what do I need to know as a trader on any particular day? Well, I don't need to be a genius. I just need to know what's the number at the bottom and what's the number at the top of my range, right? So when it gets there, could be either of them, doesn't matter which one it is, but when it gets there, what are these people around me doing? If I've got 5 people to say, well, I want to buy at 95, and I've got 100 people that say, well, I want to sell at 96, it only takes one of those 100 to say to the 5 that want to buy, yep, 95 I sell, 4 I sell, 3 I sell, 2 I sell, 1 I sell, I sell, boom, boom, boom. You see that. So a key decision-making place on a chart. Has there been a decision that's been made there previously? Yes, there has. Right, okay, well, that's where we need to start. We need to start there and understand, what did the market think the value was of this particular price? Doesn't really matter where it is in time, like we discussed 5 years ago. Time's not a concept. But if the market said, right, well, it's expensive. Okay, well, then I'll start there. And then what I do is I come down a chart and I go, right, okay, can I see another place where this happens, where it changes value, where we come back, where we retest? Yes. Right. That's my range. Now, at that point, if you then know the distance between the top and the bottom, you don't need to look at the chart anymore. You don't need to look at candlesticks or anything like that. All you could do is you could say, right, well, I've got that. Let me go up. Let me go down. Yeah. Same number. Yeah. Up and down. Then pull the chart back across. And then you go, shit, look how the market's been reacting. So where do I get my confidence from? By knowing where these ranges are and knowing how the market's reacted to them. So knowing again that if I go and make another new high, if I bust out the top of, excuse me, a previous high, well, then what do? Well, I grab that same number and I stick it on top. And I say to myself, right, I reckon the next key decision-making place will be this number here. Why? Well, look how it's reacted to this range distance over and over and over and over and over and over again. So it gives you super confidence. Now, when it gets there,
a dealing range by any chance?
I wouldn't. It's just a range to me, mate.
It's a range. Okay. I'm going to throw one more word at you, or a terminology, and just see if you've got any kind of like, I don't know, backstory with it. Transaction cost analysis. Does that mean anything to you? Transaction cost analysis? No. From a trading floor point of view, you've never heard it. No one's ever talked about it. Trading cost analysis? No. Transaction cost analysis. Okay, that's cool. I just wanted to check that in there.
The reason I've not heard of it, I mean, look, if you're talking about having to pay to do business, then every client has to pay a commission. I don't know if that's what you're on about.
No. Look, it's something we've talked about before on the show with another trader that I've had on recently, Andre Stewart, who I was actually thinking some of the stuff you were talking about may have been related, but obviously not.
Well, I taught Andre Stewart back in 2017, maybe.
Oh, you did? Okay.
2017,
okay.
Yeah. A long time ago. So maybe what he speaks about is what I said to him many years ago.
Right. Okay. Interesting.
Hey, if candlesticks still confuse you, they're costing you more than you think. My private mentor JJ's decoded 25,000 hours of trading into one better candlestick. Click the link in the description or visit tradingnut.com to watch the free video and grab the free guide.
Hey, look, Paul, it's been fantastic getting you back on the show. We're going to jump on and do a bit of chart work as well. So, folks, that's coming up. But for now, what's the best way for folks to find out more about you?
Still the same website, paulscottfx.com. There's some more interviews on there. I've done more podcasts. Obviously, I've done a couple with you now. I've done some different ones. Again, pretty much all based around the same thing, because that's the thing with the truth, isn't it? It don't change over the years. It's still the same. I may have got better at explaining myself these days. But again, as a teacher, that comes with time, I suppose. Yeah, so just there. Still don't do social media. Got no freaking interest whatsoever. Complete waste of time. Not for me.
Okay, brilliant. Well, look, Paul, thanks again. Folks, head down there. We'll put a link to Paul's website in the show notes, as well as whilst you're down there, hit subscribe, like, and that notifications bell, and we'll see you in that charting video we're about to do.